Hello, this is Japanese Economic Review Channel. Today, we will analyze Japan's Consumer Price Index for May 2026. We'll unpack inflation drivers, core trends, and sectoral divergence to reveal the underlying reality of the economy. In May, the headline CPI rose 1.5% year-on-year to 113.5. While core CPI increased by 1.4%, the core CPI showed a stronger 1.8% rise. This tells us that beneath volatile food and energy costs, the underlying inflationary current is actually stronger than the headline suggests. We view inflation through three lenses. The headline CPI reflects the raw reality of all costs. Core CPI strips out fresh food. The core CPI isolates fundamental trends by removing both global energy shocks and local weather effects, exposing systemic price movements. This chart distinguishes noise from signal. Headline CPI exhibits erratic spikes driven by seasonal shocks. However, the core metric demonstrates a steady, structural shift in baseline pricing over the last 36 months, indicating a robust upward trend. Understanding basket weights is crucial. Food, excluding fresh food, accounts for 22.3% of the index, heavily outweighing energy at 7.1%. Because of this architecture, a price increase in baseline food hits the consumer index over 3 times harder than an equivalent change in energy. The 1.5% headline is a tug-of-war, not uniform inflation. Massive inflationary pressure from food, contributing plus 0.87 points, is currently being artificially anchored by steep deflation in energy, which drags the index down by 0.20 points. Within the energy sector, gasoline plunged 7.0%, heavily suppressing the headline index. However, this deflation is not uniform. Outliers like kerosene spiked 12.4%. It is vital to note that government policy effects significantly contributed to pulling down these energy costs. Consumers are facing a baseline squeeze. Food excluding fresh food surged 3.5%. Furthermore, driven by the service sector recovery and high demand, accommodation services jumped 4.8%, while household durables rose 1.9%, adding substantial direct pressure on household budgets. Japan's 1.5% headline inflation is an illusion of stability. The structural rise in food and service costs is masked by sharp, policy-assisted deflation in energy. If energy subsidies lapse or global oil rebounds, the true underlying heat will immediately breach the headline. Looking forward, June data will be released on July 24th. More importantly, the August releases will mark the official switch to the 2025 base year index. This requires model recalibrations and will be a critical turning point for tracking future inflation trends. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.